Very much and welcome everybody to another exciting discussion on the provider relief funds and everything that you wanted to know to get caught up since our last time. We are going to kind of kick this off and be very focused, as is noted here, on changes to the reporting portal and some of the newer distributions. So we're not going to cover everything from the beginning, but it does allow us to go a little bit deeper into some of those new items. So to kick it off, maybe some quick introductions here. I am Tyler Bernier. I'm a partner out of our Oklahoma City office. I focus exclusively on healthcare organizations, and since April have been focusing on the Provider Relief Fund and all of the exciting changes and unique twists and turns that we've experienced over the last, almost 2 years. And my partner in crime, following along the entire way, has been Ashley.
Yes, Ashley Brandt, Duda, assurance partner from our Fargo, North Dakota office. I say assurance partner, but similar to Tyler, have been specializing in and following the Provider Relief Fund. Tyler, I noticed you said April, and you forgot to point out April of 2020. So we are now well over a year in, as everyone on the call knows. But yeah, hard to believe that it's been almost 2 years, but here we are at almost 2 years. So happy to be here and talk to everyone today through the various changes that have come about over the last couple of months and what is relevant now to this reporting period too.
Excellent. So we always have to kick off with this fun slide, as you probably have become accustomed to. Disclaimers, right? So information current as of today, because who knows what changes, and things seem to change daily, hourly, weekly, etc. In fact, we have a few things that are released as of effectively basically today. So always make sure to look at source documents, new versions. If you're going to go back and re-look at any of the historical webinars, take that into account. Just maybe a plug for those. We do have, Eide Bailly has a YouTube channel. So if you go to YouTube and you search Eide Bailly or you search Eide Bailly Provider Relief Funds, you'll get access to many of the previous ones we've noted. But as noted on those, again, make sure you're checking for the newest information, because things do change and they seem to change constantly. Also, as you get into some of the really specific things dealing with compliance or legal matters, obviously consult with those professionals, legal or otherwise, as it relates to compliance, legal, state laws, etc. We're going to provide as much information as we have available, but obviously not going to be potentially relevant in every situation. So broad disclaimer, right, Ashley? Fun stuff.
Absolutely.
And we have one at the end too. Cover
have to have the disclaimer, just have to have it.
Yep. So I know we are going to jump into provider relief funds, but hopefully many of you have been excited about the playoffs for the NFL over the last couple of weekends. I know I have been. Unfortunately, any team that I seem to enjoy is not very good at anything. So as you can tell from Oklahoma City, go Thunder, right? But we're nowhere near playoffs. My football team's the Dolphins. My baseball team's the Twins. So I have horrible choices. During the year, both of my kids decided to, first off, get involved and enjoy watching sports, which I love. But my son randomly picked the Bengals. I have no idea why, other than they were on TV against the Browns, random week in the middle of the year. So his favorite team is now the Bengals. And right around the same time, my daughter picked the Rams. So while I have horrible taste, apparently they have pretty decent taste, and they weren't just jumping on it during the playoffs. So shout out to my kids on that front. So as we talk about the Super Bowl, I have a great thing to add on top of all of this new Provider Relief Fund guidance. I'm going to give credit to where credit is due. This comes from one of the other fellow partners at the firm that works very closely with Ashley, Renee Gravelin. So when you throw your Super Bowl parties, while wings and chips and pizza and everything else is the go-to, one of the things that she introduced me to was if you instead try to pick a food from each of the locations that the teams come from, it is a very fun endeavor. So I've been doing that for a number of years now. It took some digging to figure out what the heck Cincinnati is known for. So I'll save everybody a little bit of time on that. Cincinnati chili, which weirdly enough, I was introduced to for the first time in Oklahoma. And if you don't know, it's basically chili on top of pasta. So there's your first. I'll let you all figure out what to do for LA. But going through the sports theme, we got a quick quote for you here. Yogi Berra, if you have not followed many of his quotes, they are all humorous, but here's a perfect one. It's like deja vu all over again. So back in April, back in June, back in July of 2020, right, Ashley? We all got funds, and then we went through a new reporting period, and we had to figure out, what to do, how to track, how to report. We're back at it now. So we have new funds, just like we did then, and we have new reporting, but most of it's fairly similar. But I think as I've noticed through the emails that come in, there are a lot of the same questions just because of the unknown, right? Like, what don't I know about because these are new funds? Like, is there something else I need to track? Is there something else I need to do? What did I not know the first time around? So that's really our intent here. We're going to go through what are some of the new distributions and what you need to know with those. And then Ashley's going to jump in and tell you, how did that portal change when it reopened for period 2? What can you expect? And maybe what are some of the roadblocks? So not to take any of your thunder, Ashley, but setting you up for the exciting part.
So you always do, it's fine.
So as per usual, I get the good news. What are all the new dollars that you got? So what are some of the dollars that came out? A quick overview. For many of you, if you applied through the portal, there were phase 4 general distribution and American Rescue Plan, or ARP, rural distribution funds available. I point that out because they are 2 separate distributions, and they are actually provided to you in 2 separate deposits should you receive any. They also have very similar, but sometimes uniquely separate requirements. So as we jump into it, maybe the first pieces of information that would be helpful to you. The ARP rural payments were first released on November 23rd. And if you remember, that was just prior to Thanksgiving. It was a nice surprise for many of you because, as we'll see in a second here, this calculation was very much from information that HRSA or HHS, and we'll use those interchangeably, information they already had. They were able to go through and adjudicate or figure out most of the payments and get those out. So 90+% of the payments went out in November. Now, phase 4, as we go through, was a little bit more complicated because that actually came from data provided by you. So as you applied, you, if you remember, put in many quarters of expense and revenue information. I point that out because the distributions weren't released equally. So in December of 2021, about $9 billion was released. Sounds like a lot. It was a lot, but the pool of funding was $17.5 billion. So just over half of the funds were distributed in December. Then about a week ago, HHS made an announcement that said, hey, because of all of the things that the healthcare environment is going through, we just want to make you know we're supporting you and we're releasing $2 billion more provider relief fund payments. And it confused everybody, including us. What this is basically they went through and they calculated out and figured out more from that pile of phase 4 funding. Now, what this told me was I need a better marketing person so that they can spin something when I screw it up and it takes longer, that it makes me look like a hero coming in on the back end.
I will say this one threw me for a loop. The first thing I did is I saw this and I went, what in the world? I reached out to our mutual colleague, Braid Schweitzer. Some of you on the webinar may know him from our provider for really fun team as well. But I said, we have new funding, what's going on? And then yes, realized that no, it's really not. So, so definitely, as Tyler said, put a very interesting spin on that.
So besides the marketing spin on it, why do we bring this up? We bring it up because if you haven't received your funding yet, neither one of these are fully complete as far as distributions. The ARP is primarily, but the phase 4, they're still working through a lot of the forms. So if you haven't seen your dollars, it may still be in process. If you have, I don't expect that they're going to be redistributing funds. I have not yet, and maybe there might be somebody out there, but I haven't yet seen where somebody got a first round of phase 4 and they got, let's say, a catch-up payment. It would potentially or probably just be that you got ARP Rural and then you got phase 4. That would be the two separate. So jumping in a few more details on this, how did they calculate it and why does it even matter? So jumping into the ARP Rural first, you can see here the steps to calculate it. Essentially, at a very high level, HRSA took records that they already have for billings to Medicare, Medicaid, and CHIP claims from a certain time frame for individuals that are in a rural market, okay? And they did essentially an averaging, an equalization of each because every different state has different Medicaid rates, right? So they kind of brought everything in line, at least to the extent possible. And then they did a spread among all of those groups that checked the box and said, yes, we would like funds from the ARP rural distribution. Ultimately, since it was about $8.5 billion, it comes out to about 3% of claims to rural participants. So another way of saying that, if you billed Medicare, Medicaid, or CHIP claims to rural beneficiaries, or on behalf of rural beneficiaries, you probably got back or would expect to get back about 3% of those claims. Now, could you figure out or recalculate how much you should be getting? It's probably very difficult. So I've been asked this before, like, how can we tell if we got what we should have? How can we recalculate it? I honestly have yet to come up with a good answer because while you might be able to pull records of Medicare, Medicaid, CHIP data, I'm not sure if you can identify all those that come from a rural market, and it's a specific rural market, right? So there is a calculation, it just may not necessarily be fully transparent. All right, phase 4, how did they calculate this one? A little bit more clear and a little bit more fuzzy, all at the same time, right? So what they did was they asked you to submit data to them. You had to submit 3 quarters, or ultimately ended up being 6 quarters because you needed a comparison period to HRSA, and they were going to base their payments based on those 3 quarters worth of information. We've talked about this in past webinars, why they focused on that, dealt with stimulus bills, etc. But that was the focus. So, you know, the why is sort of out the door. It was what it was. So what they did was they took those 3 quarters, they compared them to 2019 as the base year, and they came up with a loss ratio. And I think up to this point, we could probably take an application and figure out what that loss ratio probably looked like. Then it becomes a little bit more difficult. What they did was they flagged certain amounts, certain results, and things that fell outside of a statistical norm. And they did that based on application types. So if you're a hospital, you were compared to other hospitals. If you were a nursing home, you were compared to other nursing homes. And if you fell outside of a statistical norm, you were flagged. And if you're flagged, that potentially resulted in either a cap to your payment or no payments at all. And how will you know this? You won't. So any of those that were flagged were supposed to have undergone a more in-depth review by individuals within the agency. That probably is a reason why you might not have received the funds in December. And maybe it took till January, or maybe you still haven't received them yet. Then what they did was they took all of the resulting amounts that kind of funneled through that first set, and they grouped them by size into small, medium, and large groups. They defined to some extent what those groups are. However, it's very difficult to determine a specific entity and whether or not you fell into small, medium, or large. You could probably make a good, swag, right? An educated guess at what those categories should be for you, but may not necessarily know for sure. And the reason it's important that they put them into those categories, small, medium, and large, is they provided unequal percentage distributions to the smaller groups than they did to the large. In other words, if you were smaller within your same type of entity, you would have received more as a percent of your loss than the larger groups did. So we're already super complicated, right? I've already lost myself in talking through this, but it keeps going. So they then took that calculation and they compared it to amounts that you received previously. However, there's a caveat in there. If you applied for phase 3, they would have already done some consideration of past payments. So it doesn't necessarily factor in past payments if you applied for phase 3. If you didn't, it may potentially be a harm. And this is sort of what a number of groups have identified as a potential concern with this, because many of you probably looked when phase 3 came out and said, there's no way that I'm going to get any more. I already know how much I got. I already know what the calculation is. I'm not going to apply. And if you didn't, well, then you don't have this phase 3 consideration. So if you didn't receive funds, part of it may be because of step 6. How they alleviate that concern, I don't know. But here's how, again, trying to walk through what the process is. So they took all of that information, they gathered it up, and they basically tried to do a spread across the entire group that applied. And that accounted for 75% of the $17.5 billion. That was known as the base payment. Then they created a bonus payment for the other 25%. It was very similar to the ARP rural distributions, except rather than focusing on just rural beneficiaries, it took all of the claims to Medicare, Medicaid, and CHIP. So again, is this an area that you potentially could calculate? Maybe. So if you know all of your claims to those payers, what they said was it essentially scaled to about 0.3% of the value. So if you know you got during that time frame that was identified, let's say $1 million in reimbursements from those payers, the bonus piece should be about 0.3% of that. What you may not know was what your base payment was. Now, again, why does all of this matter if they're going to do all the calculations for you? It matters because they have opened up, as of today, again, we said we had breaking news, right? A reconsideration. So if you feel like you did not get paid correctly, either through the ARP rural distribution or through phase 4, you can enter into this reconsideration application. So there is an online form. The steps that we would recommend, first off, as I kind of outlined here, online through the PRF website, there is a lot more detail into all those steps on how they calculated things. If you can walk through that and say, hey, it really looks like we did not get paid right. Maybe you got severely capped or cut off, or you know that you experienced significant losses, so the payment just is not anywhere close. this would be the path in which to, raise your hand, flag it to HRSA to say, I want you to relook at my application. And you can question what you want. The numbers are what they are. And while we might be an outlier, it's really what we did experience. And you may be able to receive additional funds that might have been capped or calculated incorrectly. You have until May 2nd to submit that. So jot that down, especially either if you think that your payments were low or you haven't received anything yet, because the funds still might come out in the next few weeks, in the next month. Maybe it doesn't come out till April. This reconsideration will still be open. A couple of things to note, however, as noted on the slide, you can't submit an application if you missed it. So if you originally looked at this and said, I don't think I'm going to be able to make it, and now you relook at it and you say, I don't know why I didn't submit anything, I probably should have, they're not going to take any new applications. If you put wrong numbers in there, unfortunately, they're not going to let you revise or correct it. That might be why it was flagged, and you may have truly experienced a loss. I'd still go through the reconsideration, but again, what they've noted is they're not going to allow for revisions or corrections. And anything that you would suggest from a reconsideration cannot be as a result of a change in the methodology or policy. In other words, you can't say, well, this isn't fair because, the 3 month or 3 quarters you looked at weren't our harmed quarters. It was the next one. They're going to specifically look at that framework and say, was it wrong? Did we miss something? Maybe we flagged it and looked at it, but we didn't get all of the information we should have. So note to self, May 2nd, if you didn't get what you thought you should have, this would be the path to reconsider. Now, let's say that you already know about this because you had to do it for phase 3. If you remember back, they did this same process and that form was due November 12th. This is still out there. I bring it up because they are still going through these reconsiderations. It is taking much more time than they expected and probably what we expected. So if you still have that phase 3 reconsideration out there, note that it still potentially hasn't been looked at. It's also worth noting, if you do phase 4, don't expect a quick turnaround. Because again, as noted here, it was due November 12th. We're in February 1st, and they've said we haven't gotten through all of them. So if you go through the reconsideration, don't expect it to happen really quickly. All right, so let's say you do actually receive the funds. What are we looking at? First thing to note and to do, when you receive the dollars, you have to attest to them just like you had any previous amounts. And you do that by logging back into that application portal, and it should look like the screen here. And you'll notice you would have completed the validation, you would have completed the application. Now you have to complete the attestation. If you decide, hey, I don't want to, or maybe you forget, after 90 days, it will be assumed that you have attested to the amounts if you haven't returned them. So just make note of that. All right, so we've covered this before, but want to cover them again because I'm still getting a ton of questions. So maybe to put everybody at ease a little bit. What are some of the terms and conditions? What make these funds different than anything before that we received? So we're going to start with phase 4. So what makes phase 4 different? First off, if you receive greater than $10,000 in phase 4 payments, you will be required to report to HRSA any mergers or acquisitions that you are involved in. So be aware of that. If you have a merger, if you have an acquisition during the period of availability, which likely goes through December 31st, 2022, you have to report that to HRSA, and there's a reporting mechanism that's available for that. Second, if you received greater than $10,000 and you put these funds into an interest-bearing account, there are some exceptions, but in general, you'll be required to track that interest and report it as part of the reporting process. This was never included before. It was sort of assumed previously. Now it's actually part of your terms and conditions. Next, for ARP Rural, they include both of those previous terms and conditions I just mentioned, plus a third one. So this is important. If you got ARP Rural dollars, those are likely the amounts you received in November. Those have to stay with the tax identification or TIN number that received them. So previously, and with phase 4, this counts the same. If you have related entities through a parent structure, you have the ability to transfer those funds from one tax ID to the next. For ARP Rural, you cannot do that. They have to stay and they have to be used by that receiving entity. So very important to be aware of that. All right, now one of the most important things and the most commonly asked question, so to make sure to clarify, the period of availability, and what I mean by that is the period in which you can expend funds, you can count expenses, or you can have lost revenue for the ARP Rural and the phase 4 begins at the beginning of the pandemic. So all of the provider relief funds, they all have a starting date as of the beginning of the pandemic. Now, the ending date is depending on when you receive the funds. So if you got these ARP Rural and phase 4 distributions during 2021, so in that November, December release, you have until December 31st, 2022 to support those dollars. If you got them in January or you haven't yet, but you do get them in 2022, you will likely have until June 30 of 2023 to support the use. So again, everything can begin at the beginning and it ends into the future. Second, the eligible uses, just as they have been in the past. So you've heard us mention this over and over and over again, so much so that we can say it on cue, right, Ashley? To prevent, prepare for, and respond to coronavirus, and not reimbursed or obligated to be reimbursed by another source. So it's either expenses or lost revenues. Again, they have to be attributable to coronavirus. Now, what is worth noting on the ARP Rural funds, when it was released, or actually just prior to it, they did issue a frequently asked question. I would take note of this. It notes you can basically use it for all those reasons that you had considered previously. But as noted here in that second paragraph, additionally, it may include costs necessary to maintain healthcare delivery capacity or to increase healthcare delivery capacity as informed by community health needs or other things such as outreach, education, etc. So it opens the door to what is potentially available. It still needs to be tied to preventing, preparing for, responding to coronavirus, but does allow for a little bit more flexibility. So take note of this if you haven't, a very important provision. Again, this just relates to the ARP Rural funds. Now, probably one of the more important things if you don't have these websites, I wish for whatever reason, the Provider Relief Fund website had like the calendar of distributions. They used to have it. They did an overhaul, which was supposed to make it better, and they deleted probably one of the most useful pages.
That was like my favorite page. I was very upset that day. It was very
I know, and
useful.
you know what the worst part was, Ashley, because I know you and I would go out to it constantly. Neither one of us saved it.
Why would I? Yeah, why would you save it? It was constantly changing. So
I know, it was like Einstein.
If it comes back, I will learn my lesson. I'm saving that thing. But
I agree. So there are some resources, however. There's a CDC database that tracks a number of different things. Each of these links will provide information. So the first link is the total Provider Relief Fund payments you received and attested to date. So if you have not yet attested, it won't show up in it. However, if you have attested, it should show up. It'll be everything. It's not going to show you the breakdown of what you received, but it will show you that, history from the beginning. The bottom one is specific to the ARP Rural. So if you don't know, okay, which one was the ARP Rural, which one was the Phase 4, there is a database just for the ARP Rural distribution, because that was effectively a separate distribution, a different one, since it was specifically provided from that American Rescue Plan Act. And then, important for many of you senior living providers, the nursing home quality incentive payments. And Ashley's going to cover this shortly on why it matters. But there are specific uses for infection control distributions, and I'll show you what I mean in a second. But one of the databases that is available is these quality incentive payments, which do count as infection control payments. It does track those. So you can go to that database and figure out what were the nursing home QIP or quality incentive payments that I received. Now, I mentioned the infection control or these skilled nursing payments. There's a lot of confusion. This one I did track. Ashley, we got one. We got a calendar for one. So if you were a skilled nursing facility and you got a payment in May of 2020, it probably was a skilled nursing facility distribution. You already reported on that, because since you got it in May of 2020, it's a period 1 reporting. For each of these, I put the calculations as well, because you should be able to recalculate it, right? It's $50,000 plus so much per bed. So if you have 10 beds, it is $75,000 you receive. The second one, and this is the one to point out that's very important, the distribution that you received in August of 2020, again, here's the calculation to recalculate it. That is an infection control distribution. So it has very specific purposes. It has to be used for qualifying expenditures and cannot be used for lost revenues. Same thing with these quality incentive payments. Very specific expenditures, not lost revenues. And Ashley, I know you're going to fill us in on why that matters. So with that, how about we get into some of the reporting changes?
All right. Well, thank you, Tyler, for that lovely intro into the reporting. We always have to start out every reporting discussion with this infamous table, because this is really one of the most important pieces along the way as you're working through your reporting, because this really shows you, okay, based on what I received, number one, do I have to report? And number two, if I do have to report, when do I report? And also number three, what is my deadline to use the funds? So you can see here over on the left-hand side, we have the various periods with, we now know period 5 is going to exist since there were funds that were distributed here in early 2022. But essentially, if you received more than $10,000 within any reporting period, you do need to report. So that's really why those payments, knowing what you received when you received it is very important. Also, as I mentioned, have the deadline for the use of funds. So definitely keep this in mind as well, because as you see the payments that you received earlier, those have an earlier deadline for use of funds. So this can be really important, especially if you weren't able to, I know some organizations had significant lost revenue that they're able to carry forward to future payments, et cetera. But if not, certainly something to watch out for on those deadlines and make sure that you're able to maximize usage of the funds. And then as you can see here, the reporting time period. And so period 1 is done. That was this past summer/fall. So we are through period 1 and now on to discussing period 2. And so as you can see, many more to come. Another thing to keep in mind with these, all of these different reporting periods is that the covered period begins January 1 of 2020 for all of them. And that's really important because, as I said, you might have, we talk to a lot of providers and say, okay, I had a lot of lost revenue or a lot of expenses in 2020, but maybe some of that has tapered off. Just know that the covered period does begin back on January 1 of 2020. So you can certainly utilize those previous amounts, even for payments that you may have received in December or are receiving here in 2022 for phase 4. Okay, so now getting into the reporting portal itself and what is new. So this page might look familiar to a lot of you, especially if you already had to report in reporting period 1, but this is the Provider Relief Fund portal. So really encourage everybody, even if you're not quite ready to report yet, go take a look at the portal, get registered. You can see there, that's the very bottom box. Just go out, get your information started, and make sure that you're set up and ready to go. So on that same page, you'll see it's down over on the left-hand side, but we've just enlarged it here. There are some portal resources. And so there's a lot of information here, obviously a lot of links, but all of them have some useful information, but there were just a few that we wanted to point out to you specifically because these are really some key pieces of information that will help you along the way. And so the first couple over on the left-hand side there, the reporting requirements and the auditing. This is a guide that basically walks you through some additional information on all of the elements contained within the report. I think it's about 12 pages or so not too long, but something you can walk through and just get a better feel for all of those different reporting elements. There's also the frequently asked questions. This one can be a bit daunting when you first open it. 80 some pages, but the key here, everything is organized actually pretty well, and there is a table of contents at the beginning. So if you have a situation you're just not sure about, check out those frequently asked questions, and they are updated very frequently. And so something to just take a look at if you have a specific situation, there may be an answer for that. And then a couple of the other resources over on the right-hand side, you can see the reporting user guide. This is another one. It's a pretty long, daunting document, but it really does walk you through the portal step by step. So again, if there's a certain area that you're not sure about, if you page through that document, it actually is very useful and will really walk you through all of those different portal sections. And then last but not least, the portal worksheets. And it says on here it's a PDF. It's actually an Excel document, but essentially that's another one where if you are not using this, highly, highly encourage you to use this before you go into the actual portal itself, because this will actually give you an Excel document that has exactly how the tables are set up when you get into the reporting. So that way you can get all of your information squared away, get it entered in. So you're not trying to do that at the same time you're trying to fumble within the portal. So really highly recommend that you take a look at that as part of your planning process of working through things. And one thing you might notice when you go into the portal, log in this time, if you reported in period 1, is that there is a new landing page, if you will, once you enter. And so this will actually show you now what you have as active reports. So like in this example, you can see here, report 2 for reporting period 2. There is also a tab for your inactive reports. So this is where you can take a look back and look at a previous report. In this case, if you reported in period 1, where you can go in and take a look and pull that up as necessary as well. So if you reported in reporting period 1, there are a number of areas that as you go now into reporting period 2 are going to pre-populate based on answers that you previously gave. So it's kind of handy that you don't have to go back. As I said, the reporting period or the covered period actually goes back to January 1 of 2020 for all of these, but it does remember that information that you put in previously in a lot of areas. So hopefully we'll expedite the reporting process for a lot of you that reported in the first period already. So those areas where your information is going to pre-populate, the tax information and the single audit information. Hopefully your tax information didn't change. Potentially could in some cases, but make sure you double check that single audit information if you've now since received more funds to where it's looking like you may be applicable, maybe where it wasn't before. So just double check those responses. Also, your other assistance received. So that table that you filled out with noting any other coronavirus assistance that you received, that's going to pre-populate all of your previous answers. All of the lost revenue information that you entered, and then also any of the previous personnel, patient, and facility metrics will come through as well. So for these areas, what's going to happen is it's going to ask you a question up at the top. If you have not reported before, this will be grayed out. But if you have reported before, it's going to ask you if you want to change the values from reporting period 1. And so this is where, for the most part, I anticipate a lot of providers likely won't be changing information. But if you start looking at something and you think, oh goodness, we got that in the wrong quarter, or for whatever reason, something needs to change, this is where you can go ahead and indicate that you do need to change your values. It will ask you for the reason why you're making the change. So that's just where you'll just need to explain if it was just a miscalculation or something of why you are changing that. So one thing to specifically note on the changing the values, and we'll take a look at a couple of examples here as well. But for the lost revenues, if you do make any changes there, it is going to impact the prior amounts that you claimed. And so this is really important, of course, because lost revenues is one of those elements that essentially goes into determining if you are able to essentially retain your provider relief fund payment. So any changes that you're making there will be important because they will have an impact on those prior amounts. The other information, tax, single audit, et cetera, those are going to be for information only. So for lost revenues, as we've already talked about, covers the entire period of availability, not just the current reporting period. And so when you are able to, when you go into this second round now, are able to not only change those amounts reported that we talked about, but there is actually an option to change your lost revenue calculation option. And so as a reminder, the 3 options that you have available for calculating lost revenue, option 1 is just a comparison of the current reporting period back to 2019 on a quarterly basis. Option 2 is the comparison to your 2020, and in this case, we 21 as well, budgeted revenue. But the budget must be approved prior to March 27th of 2020. So actually not seeing a lot of option 2s or hearing of those going through, but it is certainly an option if you have a budget that was approved for the entire time period. And then you also have option 3, which is any alternate reasonable methodology. And so just a reminder on that if you do use a method 3, that you have some additional documentation that you have to submit, a narrative document, calculation of lost revenue, and then potentially any other supporting documentation, really just to show how that calculation is coming together. So as I mentioned, just have a couple of examples here when we talked about how essentially if you make any changes to that lost revenue calculation, how it can impact those previous reporting periods. And so this first one here, you can see that this provider had $2,610,000 of payments that they are reporting on. And so in this example, when they did their lost revenue calculation, they actually had, it's down in that second chart there, total provider relief funds previously applied to lost revenues, they had $10,000. Well, for whatever reason, they went through, determined that that was not appropriate, and they made a change to their lost revenue calculation to where now they're saying in the very top line in the bottom box that the lost revenues for the period of availability are actually 0 instead of 10,000. And so really what it's showing is, okay, there was a returnable portion then to HRSA of $10,000 and essentially a negative amount applied against lost revenue in this reporting period. And so in this case, not a great situation for the provider, as they had not only the 2.61 million to return from this period, but also an additional $10,000 from the previous period as well. So not likely that you wouldn't have any lost revenue or expenses, but just a very bare bones example to see how things are flowing through here. So here's probably a more realistic example, if you will. But you can see in this case, the provider had total reportable payments of $2.6 million. And so out of that, they had $500,000 of those coronavirus related expenses. And so here they have left 2.1 million of amounts that need to be applied against lost revenue. And so they calculated down here, first off, overall, that they had $3.4 million of lost revenue for the whole period of availability. And total provider relief fund payments that were applied to lost revenues was 1.2 million. And so in this case, they actually ended up having total provider relief funds that need to be applied to lost revenue in this period of, or excuse me, they had total provider relief fund payments to be applied to lost revenue of 3.3 million, which essentially left them with unused lost revenues that can carry forward of the $100,000. So essentially an extra $100,000 because they only needed to apply 3.3, whereas they actually had 3.4. So I know that was a lot of numbers that I just threw out, but hopefully if you have the examples and can follow those through, that will be helpful as you're working through your specific situations if you do have a change. And so also just as we mentioned here, lost revenue option 3 is definitely an option that you can utilize. And this might be one that some providers actually might end up making a change to. So when we said, okay, it's possible that you might change your methodology. So for example, maybe you used option 1 when you did your first round of reporting. And for whatever reason, you had a major change in the last 2 quarters of 2021. That means that option 1 is just no longer a reasonable option for you. Perhaps you added a practice, sold a practice, something like that. And so in this case, you can essentially change your option, but you need to use it for the full period. And if you do this, you do need to submit any new documentation if you're going, say, from in this case, you wouldn't have had documentation previously if you went from a 1 to a 3. But let's say if you did the other way around, you are required to submit new documentation, even if you submitted documentation previously. There was a new frequently asked question too that came out, and this one was just over the last couple of days here on January 27th. And so this one clarified, there were some providers out there that had payments that they were transferring between subsidiaries. And for those of you that had this type of situation, you may recall that the guidance requires that if you have a subsidiary that has received a targeted distribution, the reporting needs to stay with the entity that received the targeted distribution. So you're not able to consolidate all that reporting up. It needs to stay with that entity that truly received the payment. And so there were a lot of questions out there about, okay, well, that makes sense in theory, but how do we actually do this? And so we had some ideas and heard what some providers were doing, but fortunately they did come out with a true clarification on this, which was really helpful. And so they did note that for the entity that received and is reporting on the targeted distribution, they should report any expenses that are being claimed on their report. So even if those expenses are the expenses of the parent, they should report those expenses on their reporting. And if they're wanting to use lost revenues of a parent or another entity, that essentially they should consider using the method 3 lost revenue calculation or the alternative lost revenue calculation in order to, again, report those lost revenues on the subsidiary entity that received the targeted distribution. And so they also do clarify here that on the other side, so if you have a parent or an entity that is essentially receiving those targeted funds but not reporting on them, that it would also make sense to use the method 3 or the alternate calculation here as well on that side, so that you can essentially show that you have lost revenue transferring out to another entity that's reporting on it. So key here is that really those two should reconcile, and you should be able to show what was essentially being transferred back and forth. And so this is actually what we heard most organizations were doing for this type of reporting, but it was just nice to actually see it out there as a clarification that really is likely the best way to handle these types of situations. Another clarification came out, this one was in December, regarding the other assistance received. And so the question was, should the state and federal tax credits, such as the employee retention tax credits, a common one, be reported as other assistance received? And they did clarify that no, they do not consider tax credits to be an amount that should be reported. However, they did note that loan programs, such as the CMS advance payments, should be reported. So that was a bit of a change, because I think initially there were a lot of people out there thinking that, okay, if it's a loan, we're paying it back, that we wouldn't include it. But just something to note that they did clarify that those loan programs should be included as well. Also, they had some clarification on the personnel, patient, and facility metrics. And I would say this is an area that there are a lot of questions out there, because there's a lot of information needed. Not all of it has really specific explanations of what they're looking for, and some of those explanations can be a bit confusing. So a few things that they noted here first was just within the patient subsidiary side, that the non-financial metrics, that piece is consolidated. And they also did note that essentially if you have a change in ownership, that you only report the statistics from the time essentially that acquisition happened. So you don't go back and report statistics for an entity prior to their time as being part of that consolidated entity. Another thing that they noted, because again, there's a lot of questions on, well, where these types of employees, where do they fit? Or when I read through, the different metrics on ER visits or outpatient visits, or any of those patient encounters, that my type, it just doesn't seem to fit. And so really what they've said here is, on the staff side, really try to estimate where, to the best of your ability, try to identify your staff and put them within one of those categories. But again, really just estimate where they would best fit. And then also on the patient metric side, same thing, is that count them in the most reasonable category. So try not to worry too much about, well, gosh, it's not exactly outpatient, or it's not exactly this. Just however it is that you are normally tracking, counting your visits, just take a look and really fit it in what makes the most sense, and just make a selection and record those there. And on the expense side, just a couple of things to touch on. So as Tyler talked a bit about, one thing that will be new in this reporting round is the nursing home infection control expenses will be relevant for some of you. And so this will be something you'll see on your expense screen. You'll have this expense screen will pop up before you actually get to your other provider relief fund expenses, if and only if you receive nursing home infection control distributions during the time period. And so just another reminder here that these cannot be used for lost revenue. These can only be used for infection control expenses, which we'll touch on here in a bit. But essentially just keep that in mind, because it's another box. And so you just want to be careful that if you have both of these types of payments, that you're aware of what expenses you're putting toward the nursing home infection control, what expenses are you putting towards other provider relief, and making sure that you're getting those in the right place. Another thing to mention on the expenses, because we've talked here a lot about what carried forward from reporting period one. And so we had revenues carrying forward and other assistance, but keep in mind here that nothing is carrying forward on the expenses, and that is for a reason, because the expenses that you are reporting here, these should not be your total provider relief fund payment or expenses that you've had throughout the entire time period. This is only the expenses that you are applying towards these specific payments that you are reporting on now. So in this case, for period two, the payments received between July 1 of 2020 and December 31 of 2020. If you had expenses that you already applied towards payments in reporting period one, you do not want to report those again. Again, this is only expenses that you are applying towards the payments that you are reporting on now. And then the other thing to note on expenses that we hear a lot is just keep in mind that this is only for those eligible expenditures. And so that's that prevent, prepare for, respond to coronavirus, and expenses that are not either reimbursed by another source or that another source is not obligated to reimburse. And this one can be a bit confusing, because sometimes when you look at the categories, you see rent, you see utilities and different things, but just keep in mind the underlying premise is that it does have to be to prevent, prepare for, and respond to coronavirus. As I noted, for the nursing home infection control distribution, those payments can only be used for infection control related expenses. So no lost revenue component here. And so while the infection control piece is pretty broad, they do note a few items, costs associated with testing, reporting your results to state, federal governments, hiring staff, and then again, the caveat at the end, just the other expenses to improve infection control. So, I think the key here is just whatever it is, just to have it documented of why you feel that expense is a true expense in order to help with infection control issues. And speaking of documentation, overall, what documentation is required? So for the actual portal submission itself, you're not required to include copies of invoices or copies of financial statements where you came up with your revenue. But certainly it's a good idea to have that information, keep it in a separate, whether it's an electronic file, a paper file, somewhere where you have it together should you ever be audited so that you can produce documentation on these items. And so on the expense side, it really comes down to, why do I feel that the expense is eligible? How does it fall within that prevent, prepare for, and respond to coronavirus? If you have part of it that was reimbursed by another source, how did you determine that reduction of that reimbursement? Perhaps it's a cost-based reimbursement, something like that. And just really what support do you have? The invoice, anything to show that amount. For lost revenues, it's good to have documented somewhere, which option did you choose and why was that a reasonable option to choose? And then again, how did you come up with those dollar amounts? Financial statements you used, the approved budget you used, etc. And then another piece that's important is on the internal control side, and especially for those of you that received more than $750,000 of funds that will likely need to have a single audit. As part of the process of doing your reporting, who approved these activities? What monitoring was in place to make sure that the appropriate amounts were used and reported on and done so properly?
And Ashley, on that one, I'm a huge fan of the show Billions, except I'm not as much of a fan that I would go out to get the Showtime specific streaming service just for that. However, Prime just released new season, so it was awesome. There's a character on that named Grigor Andalov, played by John Malkovich. And one of his quotes is perfect for the documentation slide. It's, "Intentions don't matter at all. I reward actions and I punish them too." So perfect in this situation. You may have had the best intentions at heart. If you do not have support for them, it puts your funds at risk. So documentation, we cannot say it enough. Why did you do it? What was the support? What was the guidance that you used to claim that this was to prevent, prepare for, respond to? What were external specialists, etc. And as we hit the question page, I just wanted to note something because I accidentally clicked answer live to one of the questions posted, but a great reminder. Somebody asked, what if I missed period 1 reporting? And I want to just note live, I apologize because that stinks. However, there is no makeup. They provided a number of extra opening periods. If you missed it, they will expect their dollars back, and you'll be getting, if you haven't already, I'd be surprised, a request for repayment. And it is a huge reminder to all of you that receive funds through any other distributions to make sure to get your reporting done timely. This round is due March 31st. You can't report early. So if you think that you've already fully supported everything, and so ARP Rural we're done with, phase 4, we're just going to move on, you will still have to report on all those in the future. So just be aware of that. All right, final thoughts. Sorry, I hijacked you for a minute there.
No, that was a great reminder. And I think especially as you said on the document, well, both of those points, the documentation piece of don't make yourself try to remember something several years down the road too, especially some of the calculations and different things. And that's where I think just having everything together, having it well documented now, is just great. And yes, the reporting, that's why that slide, the first slide that I talked about with the chart, with the reporting timelines, the windows and everything, that is, if you take anything away ever from the presentation, I would say that is step number one, is make sure that you're determining when you need to report, and that you're noting that somewhere so you meet those timelines.
Well, we appreciate everyone's time. Ashley, as always, it was fun. Enjoy the Super Bowl, everyone. Hopefully at least a couple of you take on the recommendation and try some Cincinnati chili and whatever LA provides, which is a multitude of food options. But I'm sure we will talk again as this continues to change, but appreciate it. Any concluding thoughts?
I think you covered it. Just thanks to everyone, and we will, I'm sure, continue to be in touch as things change and evolve. You probably have not seen the last of us, unfortunately. Thank you.
Yep, thanks.